Earl Yen, Chinese stocks have sold off over the past few months. The bears are growling. What's your view of China?
Well, I think that the economy is slowing, and some industry sectors are slowing as well. But I think you have to put things in proper perspective. Whether the GDP is 9% or 8% or 7.5%, there are still some very good opportunities there. And Chinese equities, if the economy was slowing and Chinese equities were trading at a premium to US and Europe, that would be one thing, but they're trading now at a huge discount.
How do you own stocks in your CSV China Opportunities Fund? Are they ADRs? Are they Hong Kong listed, the A shares, B shares? And are you worried about accounting? Because that's one of the things that people worry about when they own stocks that are listed in China.
Right. At the moment, our portfolio is about 50% in Hong Kong listed equities and about 40% plus in US listed China equities. We also have a little bit in B shares. Chinese A shares we don't have any exposure to because those have historically been traded at big valuation premiums, and a lot of those companies are state-owned enterprises. So we have a strong preference for Hong Kong and US listed companies. I think fraud is an issue in China as it is in any other market. I think in the past there were issues with some of the U.S. listed China plays that went public through reverse mergers. I think a lot of those companies have been either exposed or they've been traded down to such low valuations. It's harder to make money on those anymore. In fact, I think it's more possible to make money on companies that are valued as if they were frauds, but they're actually very legitimate companies. But I think we have a team of 20 people on the ground in China doing on-the-ground due diligence there, visiting companies, visiting stores, talking to people there, talking to suppliers. So I think that gives us some advantage in looking at companies there.
Well, one stock you like is SoFun. Now, this is an internet site that deals in real estate.
Right.
A lot of worries about real estate in China. Tell me why you like this stock.
Well, I think that first of all, I think the concerns about the real estate sector are overblown. And when people hear about China real estate bubble, they think that there's going to be a replay in China about what's happened in the U.S. and other markets. Where I think what's actually happening in China is more of a government-engineered slowdown in certain residential sectors in certain cities. But I think that actually all the bad news about the real estate sector in China has been factored in. SoFun in particular is a dominant player. Any and all things related to real estate, whether it's doing searches, advertising, they are the dominant player, and they trade at a very reasonable valuation, and they've had strong historical growth even through last year, which was a slower year.
You also like China Distance Learning. This is ticker DL.
Right.
Once again, it's an internet-related site. It's online test preparation.
Right.
Tell me about this one.
Well, this company, it helps people that are college graduates who are preparing for various types of professional examinations, whether it's accounting exams, law exams, and it's a very compelling course offering. They have a dominant market share in several verticals, including accounting examinations. The company's a little bit of a fallen angel. They didn't grow quite as fast as people expected. The stock price traded down to very low levels. It currently trades at I think the enterprise value is just a little bit over 1 times revenues. So, and the company I think is growing quite nicely now and has a very strong franchise.
This market is
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to